In this video, traders, we look at the Rainbow Scalper strategy. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this is called the Rainbow Scalper. Some of you are already going to look at my chart and say, hey, that is not an official rainbow indicator. Do you know what? This is a similar approximation because I know a lot of you guys out there don't have the rainbow indicator and you don't need it, right? All we've done here is we've created three moving averages. They're exponential. One of them is a length of 6. The next one is a length of 14. The slowest one is a length of 26, and that's giving us, as you can see, it's kind of giving us a fan shape so that when price starts to push in the direction, the fan will open out. And it's called rainbow because you kind of color them different colors. Now the rainbow indicator will have a few more moving averages in that, but generally speaking, the idea is we're waiting for price to pull back towards into the cluster of moving averages. And of course, as prices start to move away from moving averages, the quicker one starts to accelerate, the slow one starts to catch up, the fan widens. As it pulls back in, you've got a band effectively where you're looking for price to enter. That's the key to it. So you don't need all the ones in between, you just need that band width. So this is a trade for 15-minute chart. It's a trade to be used on the major FX pairs. You want to keep this spreads nice and tight. Again, make sure you've got a broker that's got a decent low spread on your majors like US dollar CAD, USD JPY, GBP JPY, sorry, not GBP JPY, USD JPY, you know the one. I don't need to list all the majors. The idea of this is you're trying to buy a pullback, time it with these kind of these rainbow moving average spread, and then you're looking for another criteria to take the long. Let's have a look at an example, guys, and run through it. Right, so we have a trending environment. How you filter that? I like to use eyeball, as you know. If you're a subscriber, by the way, welcome back, appreciate your support. If you are a subscriber, I like to use eyeball and use it to signify a trend. Excuse me, especially when looking at a 15-minute chart. You can use ADX, you can mess around with anything like that, but a trend. Once we've got a trend, we're looking for a pullback into this rainbow moving average, or into these three moving averages that we're calling a rainbow for the video, back into that range somehow. Now, I'm not so strict to say you can't go through it, you can't tag it, you can't this. As long as we have a pullback, that to me is filter one. Check. Trend, check. Pullback, check. I love buying pullbacks anyway. If you kind of subscribe, you probably looked at other videos where we've talked about buying pullbacks, loads of different strategies for it. This is one of those to add to your trading arsenal of strategies to buy pullbacks. Anyway, the third filter is you must have 3 consecutive lower highs. So in this example here on US dollar CAD 15-minute chart, we've got 1, we've got 2, we've got 3. Right, the third one is very important because the third one is going to be our signal candle. When price then breaks above that candle, we're going to go long, and our stop is going to be 1 ATR of the time frame we're trading. This example, it's a 15-minute time frame, so I've got an ATR in here. I've got a standard 14-period settings. It might look quite different to yours because I have it on histogram, just because that's a personal preference. If you're trading a 5-minute, which this also works okay on, then settings are going to be exactly the same. Your time frame is just going to be lower. You can trade it on higher time frames, but I think this is better for scalping type strategy because you're kind of in, you're out, you're running off with the profit you've got. So stops are going to be, what's the ATR at this point in time? It's about 10 pips on this one. So your stop's going to be 10 pips. Don't forget it's going to vary from currency to currency. If you're trading USD CAD, it's going to be a different stop size to say Euro, JPY, or whatever. So the idea now is we're going to have a risk to reward ratio of 1, but we're going to have a split the order up into 2 or 3. So we take our profits after 10 pips move in our direction. What's our long on this case here? 52, so we're looking at 62. So we get a 10 pip move quite easily, take some profits off the table. Now we kind of run it and we say, hey, I want to look for two times my R, 3 times my R. Do we get a second batch? What, we're at 20, 22, what was the high of that? Let's do it accurately. High was 35, 52, so we're looking for 72. Do we get it? Yeah, we get 72, no problem at all. Okay, so once we've got that, what do? We run the third one and we trail it. In this case, we probably got stopped out. I'm not sure if we got the final lot, but the point is, it doesn't really matter for this example. The point is, that's how we split it up. If you can't trade 3 lots, then just go for the 1-to-1 risk reward ratio. The risk is the ATR. The reward is the ATR. Assume that the probability of success is quite high. Okay, next one I've got for you, Euro US dollar, 15-minute chart, same kind of thing again. I'm going to show you a loser in a second, but another winner on this one. Let's just chuck up the ATR so we can see exactly what our stop loss would be. Standard, there's no fanciness with this one, guys. It's a 14 period, which comes with standard with all ATRs. It's a histogram setting, like I say, and just personal preference of having the colour yellow. It's not going to make us profitable one way or the other. So we're looking here, our 15-minute range is around 9 pips, so we're looking for about 9 pip profit. Not huge, I know, but it is what it is. Again, you can play around with this. It's not set in stone. If you want to go 3 ATRs, 4 ATRs, if you think this thing's a beastly trend and you're jumping on a pullback that's looking nice, by all means, stretch the legs of it. You know, these are never things that are set in stone. This is like, hey, you should easily get that, but the meat on the bone comes with the second and third scales. If you don't want to, the point of the first scale is to kind of reduce the risk a little bit on the deal. If you don't want to do that and you want to go straight for the big swinging fence, then by all means do that. So we've got a lower high, 1, 2, 3 lower highs. We take the break out of it here. The high is 1.1670, so let's call it 10 pips. We get to 80, we take our 10 pips off the table. Okay, we're now in the cruise mode, and we trail that thing for whatever we want. Again, you know, if you want to kind of on a trailer and say a close below the low of that rainbow, or you want to say a close at the close of the day or midnight of the day, depending on when your close is on that, or take out a prior high, or even better, you know, trade it from a professional's perspective and say, hey, this is getting me a decent high probability entry. It's a good way of getting on a pullback. I see the trend, I see a pullback, I use some rules like those lower highs to signify when I'm going to get in, so I'm not just stabbing at it. And the good thing is it won't let you get in if the whole thing just does a V-shaped reversal. If it does just do a V-shaped reversal, you're not in, 'cause you're not getting that break above the third lower high. So you wait for that pullback, wait for then the subsequent drive higher. Your risk is nice and quantified. You know, if you want to play it and say, hey, I'm going to trade this thing right up to the next resistance level, that to me sounds like the best way of doing it. Where's the last decent level on my 15-minute chart? Oh, it's up here. There's a cluster up here. Oh, it's up the highs here. Let me try and hold it and get some real meat out of the trade. I'm a big fan of that. You know, I'm a big fan of pressing. If you're a subscriber, that is. You know, I'm a big fan. If you're new here, you won't know, but warm welcome to you anyway. You know that I like to press trades when I feel that there's an opportunity for a decent move, because that's where you start to really boost your account. So while scalping's all very well and good, and it's nice to have a high probability of success trade, whether this one suits you or not, whatever that may be, it means you can take some risk off the table. And if you're that kind of person who likes to take risk off the table, you either are or you aren't, I tend to find. If you like that kind of thing, taking some off and reducing the risk or paying you at least, then you can leave something for those real runners, and you can't start looking in for 5R, 10R, 15R. Because don't forget, if you're on the start of a trend on a 15-minute time frame and this thing starts to go for the whole of the day, and then subsequent day 2, day 3 runs, as quite common sometimes in the FX markets, you're looking at 100 to 150 pips. Off what was you know, 10 to 15 pip stop. So worth looking at, guys. That's the rainbow scalper setup. I maybe shouldn't call it a scalper, because even though it's a scalper, there's opportunities to get some more meat on the bone. But those are the rules, and let me know your thoughts on that in the comment section below. If you get on well with it, let me know. If you don't and you have some ideas to change it, or have some ideas for yourself, again, always open-minded to what you guys have got to say. Anyway, good trading. Whatever you do, keep your risk managed. Take care. See you in the next one, guys. Bye bye.